Hi everyone, I'm Lance from Verdi Plus, and this afternoon we're going to have our first Verdi Live. So this is our attempt to answer some of the questions you may have that you would like to ask Tracey or our partner advisors or coaches. So of course, for our first session, we have the CEO of Verdi Plus, Tracey Munns. And for our first question, which I will now show, there, it should appear below us. So it goes, what do I need to have to apply for a home loan? You have the floor, Tracey.
Thanks, Lance. Hi, everybody. So to apply for a home loan, it obviously can vary dependent on the bank that you go to for a loan, but there are some real general things that all banks will ask for. So to run through the list, it's a loan application form. If you go direct to the bank, it'll need to be the bank-specific form. If you go through a mortgage advisor, then we can do it on one application form, which could then be sent into the banks that we work with. So the application form is really just personal details about who you are, where you work and where you live. And it's also a list of your assets and liabilities and expenses. And it's basically just to find out where you're at financially. Following on from that, there is confirmation of income. That's normally the last 3 pay slips. If you're self-employed, we may need financial accounts or tax summaries, but it's confirmation of income. Further to that, they then want to verify what information you put in the application form and the pay slips, and we verify all of that information by getting 3 months worth of bank statements. We get 3 months worth of credit card statements. We also need to get confirmation of deposit. So the deposit is either your KiwiSaver or savings or funds from parents. So we look at that. So it's really income. Do you have enough income to service the loan? Deposit. Do you have enough deposit to be able to purchase a property? And then we go from there. There is more information over and above, but that's pretty much the core information that you need for a home loan.
Okay.
So once you've got that, we can use electronic copies. It doesn't have to be original forms anymore.
Okay. Thanks, Tracey. So next, for our second question, how long does it usually take to get an approval for a home loan? So once again, for our viewers, if you have any questions you would like to add, just comment them down below and we'll get to them. So, yes.
Okay. So a home loan approval, again, it can vary, but generally speaking, once your information is submitted to the bank, and I'll say that if you can submit most of the information up front, the approval timeframe can be faster because the bank can see all of it and make a decision quite quickly rather than keep coming back requiring more information. So when we submit an application, we would like to say that we would have an approval within 24 to 48 hours. But dependent on volume and what's happening with the banks, it's generally between 24 and 72, so 1 to 3 days. When we get the approval for the loan, it will either be an unconditional approval, which means we've satisfied all conditions that the bank has in relation to the home loan, or it's a conditional approval, which means the bank is asking for other information from you. 99% of the time, it's a conditional approval that we get, so that's normally the case. And the main conditions would be a purchase agreement for a property, because, of course, if we get you approved and you haven't bought yet, then it's a pre-approval with the condition of the bank still wanting to know what house you're buying. So we then have to give them a sale and purchase agreement to show what you've purchased, and they need to approve of that house as security. So it's important to understand that if you are doing a pre-approval, it doesn't mean that you are a cash buyer. that you can just go out and buy any other property. It basically is that you have been approved, but the bank would still like to approve of the security in the property that you've offered.
Okay. So we have a question from a viewer, Tracey. It's from Maurice Chatbot, and I'll display that now below, but I'll read it as well. So she asks, as a property investor, I'd like to know if the LVRs are likely to change in the near future, either positive or negative.
There has been some talk that it could get lowered to 50%, but in saying that, that really comes down to what's happening in the marketplace. And I think we all know that the market has definitely cooled, the property market. So I would say that it's unrealistic to think that there'll be any further investment property changes coming forward. What it would be nice to know is how long are they going to wait for the market to cool before they potentially say that you can do 70% lending on property, i.e. improve the situation in a positive way. So I would suggest that we need to consider the 60% lending rule, 40% deposit rule as the new norm. And that's what it will be unless we have an inkling of what is happening. Just on that, further to that, the property market has cooled, so lending volumes are down, but the big thing is the banks also have a shortage of funding. So the banks don't have as much money to lend out than what they had 1 or 2 years ago. So for the banks right now, having a lower volume is actually what they are wanting anyway. There's a couple of good websites in relation to interest rates. One is goodreturns.co.nz and another one is interest.co.nz. I think that there are some of the non-bank lenders on that list. Actually, I'll just while I'm doing that, I will bring that up just to confirm. But just to give you an idea, the non-bank lenders are the likes of Liberty and New Zealand credit unions. And yes, on Good Returns, they are all listed there. So some of the non-bank lenders like Resimac and Liberty and New Zealand Credit Union, NZCU, do have varying rates. So what you might see on websites aren't necessarily what you would get. So you do need to understand that the rate is dependent on you as the borrower and the product that you're looking for. But those are the two main websites that you can go to. And if you're ever wanting to check that, obviously you can contact Mortgage Advisor or Verdi Plus and lodge a support ticket on our site to find out what the banks are doing right now. So yeah, those two sites are the main ones for finding out lending rates. So how long do I fix my rate for? This is probably for a mortgage holder, whether it be a home loan that you have or an investment loan. This has got to be probably the most common question that we field. It's not an easy answer, but a couple of things to bear in mind is there is a variable rate which goes up and down with the marketplace, and then you've got the fixed rates which is fixed for a period of time that you contract in for. So I think it's important just to know what type of personality you are, because the first decision is to stay on variable versus to fix. So if you are comfortable with watching the rates, watching the markets, you're not concerned if the rates go up slightly, and if you're wanting to pay lump sum payments off your mortgage, then definitely have a look at the variable rates. If you are more risk adverse, you want continuity of your cash flow and to know what's going on so that you can plan, then fixing is a good idea. because interest rates have been going up in recent times, fixing up to 5 years could be worthwhile. But you really want to do something called what we call is interest rate averaging. Interest rate averaging is when you fix portions of your loans over a period. So you might have half your loan fixed for 3 years and half fixed for 5 years. So you can actually split your loan. So how long you fix for, it comes down to what you want your payments to be, to try and foresee the future of when that interest rate expires, what your life will be at that point in time, to see whether you should fix for longer or not. And also, if you have other loans, when are those rates expiring, so that you're not having all of your rates expire at the same time. So that's really how I respond. Every client is different as far as what that advice is. So how do I see interest rates performing over the next 12 to 36 months? Well, essentially, we're just seeing them increase. And to be fair, they're just doing little increases over a period of time. But even in the last quarter, they've risen 0.5%. I think if I just, now that I've got good returns up, the 5-year average rate is now sitting in the high 5s into the 6s. So we're obviously looking at those longer term rates coming through. So I think we need to accept that they're trending upwards. While the banks have a shortage of money, they are not inclined to discount their rates as much. They need to make their margins on the rates that are being offered. Also, by pushing interest rates up, they can bring in deposit funds in at a higher rate, so that depositors who have their money elsewhere might be more willing to put their funds into a bank for a better rate of return than what they may have had previously. So yeah, I definitely see them trending upwards. Definitely over the next year. It's really difficult to say what's going to happen 2-3 years from now, and I really think we can all have a judgment call on that, but anything can happen on the global landscape that can change what's happening with our rates. But I think to be safe, just assume that they're trending upwards. I can't see them making huge leaps, but the issue is that they just chip away with small changes, and before you know it, they're 1% and 2% higher than what they are. So if you have rates expiring within the next 6 to 12 months and things are possibly a little bit tight on cash flow and you're concerned, you can elect to break your fixed rate now and fix now. So instead of waiting for a year and the rate might be higher, you could break it now and refix for 3 or 4 or 5 years now. So you don't have to wait until your contract expires to break. And as rates increase, if you're on a lower rate and you break it to a higher rate, then you may not have any penalties either for breaking. So if you have concerns, look at that option. The other thing just to consider with interest rates is if you have a rate that's expiring 2 to 3 years from now, just always have that in the back of your mind. Keep an eye on what the rates are, understand what the loan payments would be if it were to expire, so that you can prepare 6 or 12 months out for that change. So when should I start thinking of consolidating my debt? So there's two sides to debt consolidation. One is that you have consumer debt. So that's personal loans, finance company loans, credit card debt, and that type of debt. Now, you may have unsecured loans, which means that you haven't provided a property or provided a vehicle as the security for the loan. So this is just a debt consolidation. Now, to consolidate debts without a security can be difficult because the finance companies may be unwilling to go to certain levels on that. If you have a security like a car or a house, what you can do is look at consolidating debt into a lower interest rate. So basically, if you might be on a 12% personal loan, it might drop to being a 5% home loan rate. So I would suggest that you look at consolidating debt at any point in time for consumer debt where your rates are higher than 5 or 6%, assuming you have a property in behind that. If you have a home loan and you've got several loans and you don't, you're not aware of why you've got several loans or how to manage several loans, then looking at a consolidation of your debt into a structure that you do understand and can cope with is a very good idea. Home loan debt is the biggest debt you'll ever have. It'll cost thousands, tens of thousands, hundreds of thousands in interest. So if you think that you could be doing better, find out, because those changes may be very simple on what your loan structure would be, but it actually could have a very resounding effect long term on your financial position. So we're going to be looking at doing this Q&A on a weekly basis, so that if you do have questions, start sending them in to us and come through so we can do that. It doesn't have to be mortgage related. It could be related to any form of financial topic, bank accounts, wealth planning, anything like that. I'll answer what I can, and I can also take more details from you and ensure that another advisor can help you if you have questions that I can't answer. Further to that, we've also got a range of ebooks with covering some of the topics that we probably talked about today. So Lance, do you have the ability to send links out for those? He's nodding his head, so they'll be there as well. So thank you for joining us, and hope you all have a good rest of the week. See you.